Illustration number 1. Should I start? Mr. B grows sugarcane. Oh, grows sugarcane and uses the same for the purpose of manufacturing sugar in his factory. Can I say B is involved in a composite activity of growing sugarcane and manufacturing sugar out of that? Is it tea? No. Is it rubber? No. Is it coffee? No. Rule 7 will be applicable. And whenever the rule 7 is applicable, what we do? We take the sale price of sugar minus the cost of cultivation of sugarcane. No. Cost of cultivation? No. Fair market value of the sugarcane. Hello, sir. Minus cost of manufacturing, other expenses, depreciation, whatever we'll get will be our PGBP. Sure. Will there be any agriculture income? Yes. The fair market value which you have taken in rule number 7, that only will be treated as your agriculture income. Minus the cost of cultivation, whatever balance remains is your agricultural income, net agriculture income, fully exempt. Done, no? So what you will do? 30% of the sugar cane produced, out of the entire sugar cane produced, 30% is sold for rupees 10 lakhs, and cost of cultivation of such sugar cane is 5 lakhs. Meaning that entire sugar cane which you are growing is not used for sugar manufacturing. Out of that, 30% is what? 30% is sold as it is. So whatever income which will arise by sale of that 30%, entire income will be your agriculture income. So how much income will be derived? 5 lakhs. 5 lakhs will be your agricultural profits. Now the balance 70%, cost of cultivation of the balance 70% is how much? 14 lakhs. And the market value of the same is 22 lakhs. So now this 70% is used to manufacture the sugar. So the sugar which you are selling, the sale price of the sugar, out of that sale price, the cost of cultivation of this 70% will not be reduced. The market value of this 70% will be reduced. Yes or no? And see, whatever the difference will be between these two amounts, no, will be automatically your agricultural income. Hello sir, amounting to 8 lakh rupees. 22 minus 14, 8 lakh rupees. Yes or no? That will be your agriculture income. Now already 8 lakh rupees of agricultural income which you will be exempting, that 8 lakh which you are going to exempt is already there in this 22 lakhs. No, take this 22 lakhs only under rule 7. Getting my point? So out of the sale price, and yes, 1.5 lakhs manufacturing expenses are also done. The sugar was sold for 25 lakhs. Very, very, very easy question. Okay, pay attention. How to solve this? I will write down sugar cane 100%. Sugar cane grown. Let us say whatever sugar cane grown is 100%. Okay. Out of that, 30% sold as it is, meaning without further processing. So write down sold without further processing. So the selling price is rupees 10 lakh and minus cost of cultivation is 5 lakhs. This will be directly giving you net agricultural income of rupees 5 lakhs that you are going to exempt under section 10(1). Done, sir. Now the balance 70%, processed into sugar, and this sugar is sold. Sugar is sold. Sugar which is sold. Now this 70%, for this part I will have to apply rule 7. Now when I apply rule 7, what I'll take? Selling price of sugar. How much? 25 lakhs. Minus cost of cultivation? No. Market value of sugarcane. That is rupees 22 lakhs. And one more expense is there. Minus what? Manufacturing cost of sugar. 1,50,000. Reduce. You will finally get 1,50,000. That entire amount is your taxable PGBP income. And on this 70% also, agricultural income, net agricultural income you are going to earn. And that will be nothing but 22 lakhs minus 14 lakhs. And you are going to get 8 lakhs, which will be exempt under section 10 subsection 1. So if they are telling you to calculate what? They are telling you to calculate taxable PGBP income, what will be your answer? 1,50,000. And if they are telling you that how much is the agricultural income exempt, what you will say? 8 lakh plus 5 lakh, 13 lakh. That's it. Check the solution. See, I have presented like this. They have presented like this. 30%, 70%. 30%, 70%. One and the same thing. Please check. Done? Next. Illustration number 1 is done. Come to illustration number 2. Okay, sir. Illustration number 2. C manufactures latex from rubber plants grown by him in India. Rubber plants are grown in India. And from those rubber plants, he is deriving raw rubber and converting it into rubber, manufactured rubber. Okay. Good, very good. So which rule will be applicable? Rule 7A will be applicable. Whatever profits will be there, these are then sold in the market for 30 lakhs. Wow, wonderful. What he is selling? Is he selling rubber or manufactured rubber? Grown rubber or manufactured? Manufactured rubber for 30 lakhs. The cost of growing rubber plants is 10 lakhs and that of manufacturing latex 8 lakhs. Very good. Very difficult question, sir. 30 minus 10 minus 8 will give you 12 lakhs. Out of this 12 lakh, what you will do? 65-35 only, no? Because if it is in the case of rubber, rule 7A will be applicable. 65% you will write here as your agriculture income, 35% you will write here as your PGBP. Find out the amount. 65%, 35%. 7,80,000, 4,20,000. Sir, fully exempt under section 10(1). Sir, taxable under the head IFOS, no? IFOS, no? PGBP. PGBP. Very difficult, sir. This question was also very difficult. Done, sir? Should I move ahead? Test your knowledge. Let's test your knowledge also. How much knowledgeable you are. question number 6 and question number 7. Very difficult question, sir. Again, question number 6 and 7. Mr. Sumit, a resident Indian. Resident means ROR or RNOR? ROR only. If nothing mentioned, residents are ROR. If RNOR would be there, no. They will say that he is RNOR. What I would have done here, no? I would have written Mr. Sumit, non-resident. Then the income from Malaysia, which you are charging under PGBP head, no? Taxable. Not taxable only. For a non-resident, income which is accrued outside India, received also outside India, is not taxable in India only. And what you would have done? Yo, sir had said that this is not an agricultural income, not exempt, taxable, but taxable based on what? Residential status also, which you are ignoring. See, every single thing given in your question, no, has some importance. Don't try to, be over smart with the examiner. Sometimes the examiner is more smarter as compared to us. Sometimes no, he's always smarter than us. So he can put you in, real big problems. See, reading the question, no, casually. That okay, Mohi, Sumit is there, resident. What is the big deal in this? Resident, no. What is big deal? Every SSC, every question, resident is only there. Big deal. Very big deal. Because now he's earning which income? Foreign income also. Yes or no, Kaushik? Okay. Next one. Earns income of 15 lakhs from sale of rubber manufactured from latex obtained from rubber plants grown by him in India. Growing and manufacturing rubber in India. How much income he is getting? 15 lakhs. 65, 35. Out of this, 35 will be PGBP income. And the balance, 65, is his agriculture income. Done. We have applied rule number 7A over here. Why? The activity is happening in India. So agricultural income in India exempt, and whatever balance remains taxable PGBP income. Indian business income. Yes or no? Next one. And 20 lakhs from sale of rubber manufactured from latex obtained from rubber plants grown by him in Malaysia. Now growing and manufacturing happens in Malaysia. Done. So entire income, no, you cannot apply rule 7A. So entire income you will have to treat as your PGBP income. So how much is the taxable PGBP income here? 20 lakhs plus 5.2 lakhs. And how much is the agriculture income exempt? 9.75 lakhs in this question. A small adjustment like this will be given in the total income question. So from this you will have to derive your business income, show it taxable in the total income. Agricultural income don't show in the calculation of total income. That's it. Because that is exempt. Sure? Okay. Next question. Okay, in this, what would be his business income? Bloody, we have calculated his business income as well as agriculture income both. Okay, next one. Mr. Raja. Again, he is a resident. Earns income of rupees 10 lakh from sale of coffee grown and cured in India, meaning this will be 75% and 25%. So Raja's income, 75% means 7,50,000 will be his agricultural income, and 2,50,000 will be his taxable PGBP income for Raja. And then there is Mr. Sham, who is also a resident, earns income of 20 lakhs from sale of coffee grown, cured, roasted and grounded by him in India. So he will do 60-40. So 20 lakhs, 60% will be how much? 12 lakh, and 40% will be 8 lakhs. Exempt. Sorry, 8 lakh will be taxable and 12 lakhs will be exempt. Okay, no? What would be the business income chargeable to tax in India for Mr. Raja and Mr. Shah? Business income taxable will be, in the first case, it will be 2.5 lakhs. And in the second case, it will be 8 lakhs. That's it. Sure? पक्का? Illustration number 18. Can you see this? Yes, sir. Miss Vivita, a resident and ordinary resident, means she is ROR, has derived the following incomes from various operations relating to plantations and estates owned by her during the year 31st March 25. Okay. So income from sale of centrifuged latex processed from rubber plants grown in Darjeeling. Wait. First of all, rubber plants are grown in Darjeeling, meaning in India the land is situated. On this land, whatever activities are going on for growing the rubber, from that she is deriving rubber, and now that rubber is processed into centrifuged latex, meaning rubber is manufactured. Rubber plants are grown in India, land is situated in India. From that, raw rubber is derived, liquid form, then it is converted into manufactured rubber. Can I say here rule 7a will be applicable? And whatever income is given now, I will consider that is a profit which they have only calculated and given me. Yes or no? So what I will do, I will write agricultural income this side and I will write PGBP income this side. Okay. Now rule 7a says that I have to do how much? 65% and 35%. 65% will be agriculture income and 35% will be PGBP. So 3 lakh into 65% will give me 1,95,000. That will be my agriculture income. Be careful, huh? If you are writing 65%, that is agriculture income, write it this side. Okay. And 35% PGBP income, write it that side. So the balance will be 1,05,000. 1,05,000. Done. The first income is done. Second one, income from sale of coffee grown and cured in Yerkad, Tamil Nadu. How to pronounce it? The pronunciation was okay, no? Yerkad, Tamil Nadu. Tamil Nadu, India. In India, coffee is grown and cured. Rule 7b. Here I will take 75% and 25%. So 75% of 1 lakh will be 75,000 and here it will be 25,000. Okay. Now this third one is important. Wait. Sale of coffee grown, cured, roasted, grounded in Colombo. Sale consideration was received in Chennai. Indian income received in India. So received in India, Indian agricultural income. I will do 60, 40. 60 slabs from this side, 40 slabs from this side. Colombo is not in India. Sri Lanka. Land situated outside India can never give you agricultural income exempt. So if you are doing 60-40, 40% you are claiming as exempt as agricultural income. Is it from a land situated in India? Entire bloody income is coming from a land which is situated outside India. You are not supposed to apply the rule 7b here. You are not supposed to do 70-40. Getting my point? So the important part here is land is situated in Colombo. Okay. So even if you want 7b you identified, You had to do 60% and 40%, but that you do only if growing, curing, roasting, grounding coffee in India. Only then you do 60-40. Apply rule 7b. Otherwise, don't apply it only. No need to apply this. What will you do? Entire 250 will now be your PGBP income. You are in the business, and this income will be your PGBP income. Entire 250 you will write this side. How many of you committed this mistake? 60-40? No one. Entire 250 you have written this side. Sure. Very good. I'm very happy. So, next one. Income from sale of tea grown and manufactured in Shimla. Do you know where is Shimla? It is near to Manali. And where is Manali? It is near to Shimla. But both ways it is in India only. So, growing and manufacturing tea in India. Rule 8. 60-40. So, I am not writing down the rule because the space is less. So, 4 lakhs. 60% of 4 lakhs will be 2,40,000, and 40% will be how much? 1,60,000. That is your PGBP. Next one, income from saplings and seedlings grown in nursery at Cochin. Oh, seedlings and saplings grown in nursery at Cochin. Basic operations were not carried out by her on. No need to perform any basic operations also on land. If you are earning any income from sale of seedlings, saplings, etc. in a nursery in India, that will be your agriculture income fully exempt. Yes or no? So, where I will write this entire 80? Entire 80 this side. No business income, sir. Now, can you please total and tell me the amount? 1,05,000 plus 25 will give you 1,30,000. 3,30,000, 3,80,000, 4,80,000 and 60 will give you 5,40,000 if I am not wrong. Please check. 5,40,000. Is it okay? 540 only, no? This side. And this side how much? 195.75. How much is that? 590. Okay, 5,90,000. You calculated properly, no? This will be fully exempt under section 10(1), and this you are going to show as your PGBP income. I have already written will be taxable. Done, sir. Done, sir. This type of questions can come in the exam for 4 to 6 marks. Be very careful. Or any one item out of this, no, they will pick up that item and they will put in your main question. So you have to be careful. Okay. Now coming to test your knowledge part. In test your knowledge, no, there is one question. That question is question number 10. Question number 10. You must be thinking that this is very difficult question, sir. But not at all difficult. I'll tell you why. Okay. Pay attention. Mr. Tenzing is engaged in composite business of growing and curing coffee in Coorg. So, growing and curing coffee in Coorg, Karnataka. So, the agricultural activity and the manufacturing activity, both activities happening in India. So, agriculture income from a land situated in India and the manufacturing activity in India from this business. I will have to do 75-25. 75-25. But the whole of the coffee grown in his plantation is cured. Okay. So whatever coffee he grows, he doesn't sell anything out of that. If he sells, then it will become his agricultural income. But he doesn't sell. He brings the entire coffee grown and cures it. Okay. So whatever profit will be there from 100% coffee grown and cured, whatever profits will be there, that profit will be 75 and 25. But you will have to calculate that profit first. And in order to calculate that profit, they have given these details to you. Okay. Now tell me, if you are selling cured coffee. So cured coffee is your final product which you are selling. So how much is the income? It is 22 lakhs. So I will start from here only. 22 lakhs, no? Yes. 22 lakhs is the sale proceeds. Now if I would have been in rule 7, what I would have done? I would have reduced the cost of cultivation. No, I would have reduced fair market value over here. But since I'm not in rule 7, I'm growing and curing coffee in Coor, I'm in rule 7b. I have to do 75% and 25% of my profit. So for that I will have to calculate my profit, calculate my composite income. To calculate the composite income, 25% of that will happen. To calculate that income, I have to reduce cost of cultivation and not the fair market value. Yes or no? So what is the cost of cultivation, guys? Cost of growing coffee is 3,10,000. I will reduce 3,10,000. I will also reduce the cost of manufacturing also. Cost of manufacturing is 3 lakh, guys. And I will reduce all the expenses, allowable expenses, depreciation on these composite activities. Yes or no? So what are the allowable expenses? Only one expense is given, motor car expense. Okay. But that too also not fully allowable. Why? Because see, motor car is used only for manufacturing business. The entire motor car expenses, running maintenance expenses would have been allowed if I would have used the motor car only for manufacturing. They are saying that the motor car is used for personal purpose at the rate of 20%. So whatever motor car expenses are there will not be allowed fully, will be allowed 80% only. Whatever motor car depreciation you will calculate will not be allowed fully, will be allowed to the extent of 80% only. Yes or no? But to calculate that depreciation, see, 3 lakh is given. Can I say 3 lakh is the opening WDV of the motor car block? Any additions happening? No. Any deletions happening? No. So closing WDV for the purpose of depreciation will be 3 lakh only. So on this entire 3 lakh, I will charge depreciation. What is the rate of depreciation which I am going to charge? 15%. Now if you will calculate 15%, you will get 45,000. That 45,000 would have been allowed fully if the motor car was used only for manufacturing and not for personal. Yes or no? But it is used for manufacturing as well as to the extent 20% is for personal. That cannot be allowed. Ignore. So out of this 45,000 which you are going to calculate now, entire 45 will not be allowed. Only 80% will be allowed. So I will do 80% also here. So how much you are doing? How much you are getting? Tell me. 36 if I am not wrong. 36,000. Sure. Done. Now see, for this motor car there is expense also. 50,000 expense. 50,000 motor car expense. This will also be allowed 80%. So 80% will be 40,000. So while calculating the profits, I have to reduce all the expenses on manufacturing as well as agricultural activities, including the depreciation on the assets, everything. So motor car related 40,000 expenses I will reduce. Motor car related depreciation 36,000 I will reduce. And also one plant and machinery is used, and that entire plant and machinery is used in manufacturing. Good. Very good. So entire depreciation on that plant and machinery can be claimed. So what will be the depreciation here? I will have to calculate at the rate of 15%. That will be 2,25,000. So that depreciation I will claim as a deduction over here. Now anything else remaining? Any other expense or depreciation? Anything else remaining? Nothing remaining. So do one thing. Total 22 lakh minus 3,10,000 minus 3 lakh minus 40,000 minus 36,000 minus 2,25,000. You are going to get 12,89,000. Tell me if you all are getting this 12,89. Everyone getting this? This is your composite income. You are going to split this into two parts. Out of this, 75%, which is equal to 966,750, will be treated as your agricultural income, fully exempt under section 10(1). Got it everyone, sir? Yes. And 25% out of this will be how much? 322,250 will be treated as your PGBP income, and this will be taxable. What they are telling you? Compute the income arising from above activities. Yes. Income arising from above activities is agriculture income. That also I have computed, exempted, and income arising is PGBP income. That also I have calculated, and it will be taxable. Done. Was this question difficult? So easy, damn easy question. This type of questions directly they ask in the exam. If I am not wrong, this type of similar type of question they have asked in the past also in the exam. 4 marks, direct 4 marks question. What you are supposed to do? Pick up all these items from particulars and put it in your particulars in the answer. Write down the amount in the amount column. Total will be 12,89,000. Split 75, 25. 75 agriculture income fully exempt, 25 PGBP income fully taxable. That's it. Very easy. Should I move ahead? Illustration number 12. First chapter, illustration number 12. The question says that Mr. X, a resident, has provided the following particulars of his income for the previous year 24-25. Income from salary computed. No need to do anything. They have computed salary. Take that salary as a part of your total income. Next, income from house property, that is also computed. Take that as a part of your total income. And both the incomes are taxable at normal rates. Okay. No special rates applicable. Now, agriculture income from a land in Jaipur and expenses incurred for earning agriculture income is 1,70,000. See, we always consider net agricultural income. You would have seen me, I have not written agricultural income only. I have written net agriculture income everywhere. Please pay attention. See, net agriculture income. Net agriculture income means the gross agriculture income minus expenses on agriculture. Net agriculture income will be exempt under 10(1). Yes or no? So net income will be how much? 480 minus 170. This is your net agriculture income which will be exempt under 10(1). And this amount is more than 5,000. Your total income, salary plus house property, total income is also 13,30,000, more than your basic exemption limit. And you are an individual, assessee to whom slab rates are applicable. So your tax liability will now be calculated by partially integrating agricultural income. Yes or no? So how will you do it? Please pay attention. See, if the assessee is not following 115 BAC, we will take he is not following 115 BAC, and his age is also 45 years, meaning he is a senior citizen or not a senior citizen? Not a senior citizen. For him the basic exemption limit will be 2,50,000. Be careful here. Okay. So you will take the total income 13,30,000, and then you will take net agriculture income of 3,10,000. Done, sir? 3,10,000 only, no? Yes. And 1330. Add both of them. 16,10,000 will be there. On that, calculate tax. T1 will be how much? First 2,50,000, no tax. See, we are not following 115 BSC, so we are going to apply the normal rates. And normal rates, the basic exemption limit will be 2,50,000. Understanding? Wait 2 minutes, we'll check now. Okay. So up to 250. Agricultural expense what? 480 minus 170, it will be 3,10,000 only, no? 3 lakh 10 and 13 lakh 30 plus 3 lakh 10 will be 16 lakh 10 only, no? What have you done? No need to add agricultural expenses. Reduce the agricultural expenses, you will get net agricultural income. Net agricultural income you add in your total income, no? Step number 1. So what is your total income? Total income is this only, no? Income from salary 10 lakh 80 and this 2 lakh 50, 13 lakh 30. 13 lakh 30 plus 3 lakh 10. So agriculture income 480, to on this expenses incurred 170. If you reduce this, you will get 3 lakh 10 as net agriculture income. Got it? So 480 minus 170 will be 3 lakh 10. Correct? No. Net agriculture 310 will be exempt. And total income 1330 will be taxable. 1330 total income tax to be calculated, but I will include the agriculture income. Step number 1. Done? So 16 lakh 10. Can you calculate the tax? Normal. 2 lakh 50, no tax. 2 lakh 50 to 5 lakh. 5% will be how much? 12,500. 5 lakh to 10 lakh. 5 lakh to 10 lakh. It is 20%. On 5 lakh, it will be 20%, it will be 1 lakh. And any total income over and above 10 lakh, that is 6 lakh 10,000. On that, you will calculate how much? 30%. 6 lakh 10,000 into 30%. You will get 1 lakh 83,000. 1 lakh 83 plus 1 lakh 12,500. You are going to get 295,500. Getting it? 295,500. See, I'll keep on showing also. Huh? See, 45 years, default tax regime. No, not default, normal. See, this is the normal provisions. 115 BAC. We are not following this. Okay. And see, here 13 lakh 30. Total income 13 lakh 30 and 3 lakh 10. On 1640, we are calculating the tax. Okay. So that will be, okay, this is 16 lakh 40,000. 16 lakh 40. My mistake. In totaling. This totaling my mistake. 1610, no. 1330 plus 3 lakh 10 will give you 1640. On 1640, if you will calculate tax, it will not be 295,500. It will be only 3 lakh 4,250. 3 lakh 4,500. Please calculate. On 6 lakh 40, you will calculate 30%. 30% of 6 lakh 40. 1 lakh 92 plus 1 lakh 12,500. You will get 3 lakh 4,500. This is your tax one. Okay. Now, this is your step number 1. Step number 2, what you will do? You will take net agricultural income of 3 lakh 10,000 and you will add basic exemption limit of 2 lakh 50. How much you will get? You will get 3 lakh 10 plus 2 lakh 50. 5 lakh 60 you will get, no? On this 5 lakh 60, you will calculate tax 2. So 5 lakh 3 lakh 10,000 plus 2 lakh 50,000. This 5 lakh 60. Out of that, first 2 lakh 50 no tax. Then 2 lakh 52, 5 lakh, it will be 5%, 12,500. And on 60,000, it will be 20%. So 60,000 into 20% will be 12,000. 12,000 plus 12,500, it will be 24,500 if I am not wrong. Are you getting 24,500? Now pay attention on this 24,500. Step number 3. Come on. T1 minus T2. How much you are going to get? 3,04,500 minus 24,500. You are going to get 2,80,000. Are you getting 2,80,000? This is your tax on total income. Now, there will be no surcharge, there will be no rebate. You are just supposed to add 4% to this. Okay, add 4%. Into 4%. 291 200 291 200 check 291 200 done. Now please wait, if you are not following 115 BSE and your age is 45, then this is your tax liability, because for you the basic exemption limit will be 2,50,000. But if you are not following 115 BSE and your age is 70 years, meaning you are a senior citizen, for you the basic exemption limit will be 3 lakhs. So now the same calculation you are supposed to do, but remember, don't forget to take 3 lakh rupees as basic exemption limit. Okay, so see what I'll do, I'll copy the same thing over here, same thing I'll copy. Okay, but I'll make few changes. What changes I'm making, I'll tell you. Wait, please wait. See, here now, this will remain same, this will remain same, this will remain same. But the tax liability will not remain same. Why? Because now 16,40,000 is the total income including agriculture income for a assessee whose age is how much? 70 years. Now for him the basic exemption limit under normal provisions is 3 lakhs. So up to first 3 lakhs no tax. 3 lakhs to 5 lakhs. On 2 lakhs he will pay 5%, 10,000. Then on 5 lakh to 10 lakh, 20% he will pay 1 lakh. And then above 10 lakh it is 6 lakh 40. On 640 he will pay 30%. So 640 into 30% will be 1 lakh 92 plus 1 lakh. But don't add 12,500 now. Now you are supposed to add 10,000. So it will be 3 lakh 2,000 only. So this tax will change. This will come 3 lakh 2,000. Now please pay attention. Here you had taken 2 lakh 50 as basic exemption limit. Do you remember? Now if he is a senior citizen, his basic exemption limit will be 3 lakh over here. So now this will be 6 lakh 10,000. On the 6 lakh 10,000 if we calculate the tax, first 3 lakhs no tax. Then 3 lakh to 5 lakhs, 5%, that is 10,000. Then 5 lakh to 6 lakh 10,000. On 1 lakh 10,000 he will pay 20%. 1 lakh 10,000, 20% will be 22,000 plus 10,000. He will get 32,000 as tax. Now tax 1 minus tax 2. 3 lakh 2,000 minus 32,000. His tax will be 2,70,000 now. Are you all getting 270? Please check. 270 and 4% of that. He will get 2,80,800. Please check the final tax amount. 2,80,800. Getting it, everyone? Understanding? Now pay attention. Now the same calculation I will be doing, same calculation, but the tax rates will be different. Because now I am going to do 115 BSE. And in 115 BSE, irrespective of your age, you are going to get basic exemption limit of 3 lakhs only. So only one calculation will be made, and that calculation will be applicable to the assessee whose age is 45 and whose age is 70. The same calculation will be applicable, because under 115 BSE, different exemption limits are not there. For everyone the exemption limit is 3 lakhs only. Hello sir. But the tax will not be same. The tax rates are different over there. So we are supposed to apply the tax rates of 115 BSE and calculate this tax. Getting my point? So what we are going to do now? Pay attention. I am going to say that now the assessee is following 115 BAC. And now whatever his age 45 years or 70 years will not make any difference, because basic exemption limit at both the places same. Hello sir. Getting my point? Pay attention now. What I'll do here, I will take this calculation, copy, and I will change it a little bit. Copy, and I will paste it here. Okay, same calculation, same. But wait, now this tax will change. This will also change. This will also change. This will also change. See, my total income is 1330 only. Assume that the total income under 115 BSE is also same, 1330. And 3 lakh 10 is my net agriculture income. 16 lakh 40. Tax one will be what? First 3 lakhs there will be no tax. Because under 115 BSE, 3 lakhs is basic exemption limit. Yes or no? First 3 lakhs there will be no tax. Then 3 lakhs to 7 lakhs. On the 4 lakhs you are going to pay tax. So first 3 lakhs you are not going to pay any tax, nil. First 3 lakhs no tax. 3 lakhs to 7 lakh. On the 4 lakh you are going to pay 5%. 5% of 4 lakhs will be? 5% of 4 lakhs will be 20,000. Yes or no? So it will be 20,000. Now 7 lakh to 10 lakh, 3 lakh rupees. He is going to pay 10%, which will be 30,000 only. Okay. Then please pay attention. 10 lakh to 12 lakh. On this 2 lakh, he is going to pay 15%. Yes or no? Again it will be 30,000. And now 12 lakh to 15 lakh. 12 lakh to 15 lakh. On this 3 lakh, he is going to pay 20%, which will be 60,000. Done, sir? Any total income over and above 15 lakhs? Yes, sir. He is earning 1,40,000 more over and above 15 lakhs because his total income is 1640. No. So on that 1,40,000, he will calculate what? 30%. So that will be 42,000. Can you calculate all these? 42 plus 60 plus 30 plus 30 plus 20. 1,82,000. Everyone should get this tax. 182. Okay. Now see. Now 3 lakh is the 3,10,000 is net agriculture income and 3 lakh is the basic exemption limit, which remains same here also. Yes or no? But now the tax rates are different. So the tax too I did not copy it. Okay, no? So tax rates are different. First 3 lakhs, no tax. 3 lakh to 7 lakh, no. 3 lakh to 6 lakh 10,000. On this 3 lakh 10,000, he is going to pay how much? 5%. So 3 lakh 10,000 into 5% will be 15,500. So this tax will be 15,500. Did you get this? So 15,500, 1,82,000 minus 15,500 will be 1,66,500. No surcharge, no rebate. 4% cess. 660. So 166,500 into 4% plus 173,160. This is the final tax liability. Let's check. If he is following 115 BSE, default tax regime 115 BAC, he is following. So whatever may be his age, the tax liability finally will be 173,160. Getting it? Easy question. Question was easy, but there are too many calculations. Okay, so you have to be little bit careful while doing the calculation, because somewhere the basic exemption limit is increasing, somewhere the basic exemption limit is different, somewhere the tax rates are different. So you have to be very focused that okay, you are making the calculation for 115 BSE, you have to apply the tax rates of 115 BSE only. And here there are no separate basic exemption limit for senior citizen, super senior citizen, everyone 3 lakhs. Now if you are making the calculation under 115 BSE, no, you are shifting out. So if you are shifting out and making the calculation, now you will apply the normal tax rates. Here the basic exemption limit is different for all. And tax rates are also different, slab rates are also different. Yes or no? So if you have this much consciousness, no, then this question is very easy. Got it? Sure. So this is the end of your chapter agricultural income. Done everyone? Sure? Very good.